Economist, who called 2008 housing crash, predicts another 15% drop in home prices. It's across the United States. Now, this is a guy looking at his charts going, this, going to that, 15%. I own an appraisal company with actual appraisers out in the field appraising things, purchase and refinance transactions. I also own a real estate brokerage with real estate brokers who are out in the field buying homes for their clients, selling homes for their clients. I'm going to give you my rundown on what I think the market's going to do. Let's jump on into it. Here we go. Home prices have a long way to go before they hit bottom, Economist argues. Do they? Do they? I don't think they do. I think you've already seen most of the drops that you're going to see. And it wasn't much, was it? It wasn't much. This article says 5% across the United States. So you've got some markets that maybe tanked 10. You got some markets maybe tanked more than that. But usually there's some extenuating circumstances. Maybe an employment situation changed massively. Here in the Pacific Northwest, we are up almost a half point year over year from January to the previous January. We're up. We're not down. We're up. Now, could that go down a little bit further? Well, yes, because what's happened is the market in summer of 2022, it was screaming. It was going for the moon. Well, it had already been to the moon. It was on its second orbit round, right? So it was screaming. And then it tanked Q3 and Q4. I mean, just wheels came off the cart, just poof, market stopped, right? Market stopped. But pricing didn't drop incredibly. Just the amount of activity did. Interest rates doubled in a short period of time. You're going to have velocity of the marketplace basically come to a grinding standstill. And it did. But that doesn't mean that pricing just free falls. Pricing doesn't crater. So up, down, and where we sit now is still a little bit up and above this Pacific Northwest, and that's what I can speak to. It's a little bit up and beyond where we were January of 2022. So, those are your stats. That's your science. That's your data, not some flow chart with, based on affordability. And what the guy is saying, what this economist is saying is that homes are not affordable. Therefore, they need to drop to get us into a more normal market. We've been saying that here in the Seattle market for 20 years. This isn't affordable, not normal, not affordable. Can't have 55% of your gross pay going towards housing. And it just keeps ratcheting up, right? It just keeps getting higher and higher, that percentage that you pay towards housing. U.S. economist famous for predicting the 2008 housing crash believes home prices could plunge. Here's the operative word, could plunge another 15% this year. So nationwide, we've already said 5. Here in the Pacific Northwest, you got 0. So what will they do? Will they drop another maybe 5% nationally? I think you see 5% tops. That's what I think. I think that's the haircut you see. And then the market starts to ramp up. And I'll tell you why in a little bit here as we go through this. In a recent analysis note, Ian Shepherdson, the founder and chief economist of Pantheon Macroeconomics, suggested that home prices declines will accelerate further in 2023 as a result of low affordability and growing inventory. All right, with interest rates doubling, yes, affordability just crushed. But what we saw in 2022 was we needed to slow that housing market down because it was a runaway freight train. It's like that train with all the toxic stuff on it. Where was that? Ohio? Oh, that was a train wreck. I mean, literally a train wreck, right? Now I think they're going to do some detonated explosives and try and get that train wreck, just all the chemicals to do their thing. Well, real estate market was just runaway freight train. Like, let's see how this goes. We needed to slow that down because the whole inflation thing, the Fed did their thing. And now you've had interest rates drop almost a full point, gone from, hovering around 7% at their peak to down just over 6% most recently. Now they're somewhere around 6.25%, something like that. But a lot of folks in the mortgage world think that we're in for interest rates down about 5.5% in the next few months. And I strongly believe that's going to happen as well. Federal Reserve is going to do a couple more point bumps of probably a 0.25 point a pop. And if they do anything different, then who knows what'll happen with mortgage rates, depending on whether it's more or less than expected. But that kind of thing is already priced into the marketplace, right? So today's interest rates already account for the Fed doing another couple of bumps. And that's what, confuses people so greatly. But rates are going up. No, they dropped. Oh, well, how'd that happen? Well, it's all based on expectation. What? This makes no sense. I know it doesn't. That's why you're watching News for Reasonable People, because you might get a little bit of something here. But yeah, it's all based on expectation. And if something happens in the marketplace that's, outside of expectations, then that's when you see the wild gyrations, right? What happened? You see those employment numbers come in. They came in way beyond what we're expecting. Like, that's not good. Because uncertainty is the stock market and all this financial stuff. It's enemy. It's a real enemy, right? We estimate that single-family home prices have fallen by 5.4% from the recent peak in May 2022. Okay, so talking May of 2022, absolute tippy top. How much of a run had they gone on to that point? 40%? 35%? So you're still up 30%? I mean, all right, are we talking coming down another 15 off the tippy top? But they still have to fall by a further 15% or so before they return to their long run average. I don't think that's going to happen. We're not going to return to this long run average where you've got affordability here and, what people are able to pay here. Those two things are, we're in a different market now. It's a different market. And a lot of this economic stuff, it's kind of off. And that's compared to disposable income. So return to their long run average compared to disposable incomes. He's saying 15%. So you gotta look at what these economists are saying. And they're saying could happen. I don't think they will. Will this happen? No, I don't think it'll happen. And here's why. I am already seeing a very early thaw in the real estate market. That means things are taking off kind of early. And a lot of it's because interest rates, the Fed's impact on housing, it happened, but prices didn't tank like people thought that they would. There's still enough demand out there. And what we're seeing right now in the Seattle market, you're seeing a bunch of people come out of the woodwork demand-wise that have the firepower to buy stuff. So here in Seattle, East Side market, Bellevue, we're seeing multiple offer situations. We're seeing escalation clauses. We're seeing stuff sell for well over list price. Again. Now, you might say, well, that can't be good. It is what it is. You've already got less than 2 months of supply in most of these markets. There's still not a ton of stuff on the market for buyers to look at. And now you've had a recent, almost point drop in interest rates and mortgage rates. All right. Even though the Fed is doing their thing, bumping things up the other way. And people always tell me, but Sean, rates are going up. Well, no, not mortgage rates. Look at where they were and look at where they are and look at about where they're about to go. Oh, well, is it the best time ever to buy a home? Well, how much can you afford? That's the thing is things have gotten so expensive and so elevated that it's a relative concept, right? And here in Seattle, we've got so many tech bros that even though we just had a bunch of layoffs, you got people that have solid jobs that are still going hard and they're dropping the hammer on buying homes right now. And that's based on what I'm seeing with my summit brokers, what I'm seeing with posts from other people in the industry, with other boots on the ground brokers selling real estate right now. That's what they're talking about. They're not talking about, well, I had an open house today. Nobody came. They're talking about people coming through open houses. And they're talking about, $8 million, $10 million homes selling in a day. Now that's not the rule. That is an exception. But for that to happen during this kind of point in the marketplace in February, early February, that's unusual. So are we off to the races? No, but relatively in what should be an absolutely dead market, considering where we've been and how little time has gone by. Yes, we are off to the races for sure. Even on my appraisal side, we're seeing a little bit of a pickup. And appraisal lags pretty far behind the whole sales process because by the time appraisals are ordered out for a purchase transaction, you've already gone through a whole bunch of these other processes because people don't want to spend the $700,000-800,000 for an appraisal to find out, oh yeah, our deal isn't going to go through. So that $1,000 you spent, sorry. It could be a couple of grand on an expensive home in a market where there's no data, something along those lines. But even a couple of $1,000,000 now is, it's almost like entry level housing, right? And you're like, I remember when 900 grand was just a crap ton of money way back in the day, back when a nickel bought you a candy bar, a quarter bought me a candy bar. And then it went to 35 cents. And then, yeah. It's expensive, right? So he believes the prices have a way to go before they hit bottom. I don't think that's going to happen. Statistically, they probably do, but I don't think we're going to see that. Maybe in some other markets in the United States that were due for a pretty steady haircut, given maybe their economic base or whatever. But I'm not seeing that here in the West. During the COVID-19 pandemic, home prices soared at a pace not seen since the 1970s, with mortgage rates near a record low. Home buyers flush with stimulus cash and eager for more space during the pandemic flocked to the burbs. Demand was so strong and inventory so low at the height of the market that some buyers waived home inspections and appraisals or paid hundreds of thousands over asking price. Now, you can't waive an appraisal. Only your lender can waive an appraisal. It's one of these misnomers that drives me crazy when people write it. Because yes, you can get an appraisal waiver, but that's if you've got 50% down, 800 credit score, and you've never had a ding to your credit ever, and you make 10 times what your mortgage payment is. Those are the people who get the appraisal waivers. I'm over-exaggerating. There are more circumstances where you can get an appraisal waiver, but individuals can't waive their appraisal. It's not like, I just don't want one. I'm not going to have it. The lender requires you to have it because they want to make sure that what they're lending you makes sense from an asset standpoint on, the price of the home versus what you're going to put down and all that good stuff, right? That frenzy, we're talking about the frenzy of the pandemic, that frenzy came to a halt when the Federal Reserve embarked on the most aggressive interest rate hike campaign since the 1980s as it tried to slow the economy and crush runaway inflation. What do you want to bet the Fed does a couple of quarter point pops and then has one meeting where they're like, things are looking good. Then a bunch of data, economic data comes out, and then the Fed drops rates. They go through a couple of rate drops, and interest rates on mortgages will drop significantly at that point in time. What do you want to bet that happens? I could very well see that scenario happening because it's happened before. The Fed came to this whole deal late, right? Like, what inflation? What transitory inflation at best? Oh God, we're just in a heavy inflationary period here. All right, we need to jump to it. 3/4 point whack, 3/4 point whack, half point whack, half point. Now we're down to a quarter. And then do we reverse position and have the Fed actually decrease rates? You can see that. That wouldn't surprise me. We've seen it before. They just, get the market going one way and then, we need to course correct. Let's go the other way. It's not uncommon. Policymakers already lifted the benchmark federal rate 7 consecutive times in 2022, which would be an argument that they overcorrected. Given our inflationary data, I don't think that's it. I think they need to do at least another couple of points. But while they're doing those point increases, not full point, but whatever they're going to increase, quarter point, whatever. While that's going on, you've got inflation data coming in, and we can't predict exactly where that's going to be. Just like the job creation last week, it way exceeded expectations. Like, what? Where'd that come from? Don't worry. It'll probably get rewritten down. All right, guys, we got to revise that. Doesn't look good for the books. We need to cook the books a little further. And have indicated they plan to consider raising rates higher this year as they try and crush inflation that is still running abnormally high. So what if we get into a situation where you get all this data coming out and everybody's like, we don't want a recession. We don't want a recession. Oh no, recession. The Fed reverses course and we need a 0.5 point cut in interest rates. Federal fund rate. Yeah. The interest rate sensitive housing market has borne the brunt of tighter policy, with mortgage rates more than doubling over the course of the year. Home sales evaporated and prices began to decline from record highs. I keep hearing that, And initially, we saw some stuff in the marketplace that was way overpriced to begin with. That stuff came down, but it was too high anyway. So asking price isn't a data point. It's all asking price is what we know a home will not sell for. Because if it was priced accordingly, it would sell. It would be sold, right? So asking price equals we know what it won't sell for. Now you might say, well, Sean, somebody's going to come in and make a full price offer. All right, let's see it. But until then, my theory is, well, then it's probably on for more than it should be. You're going to have to see a price reduction if it's been on the market for a while, right? Because that's the equilibrium deal we talk about. A point where supply meets demand, boom, there it is. How's that for Econ 101? Okay. So, we've got these record highs and have things been slow? Absolutely. The wheels came off the cart of real estate. They just did. But that's what happens when you double interest rates, which really impacts, the consumer's demand for real estate, because you've gone from all-time great ability to purchase to, oh my gosh, that's not good. 7% interest rates on a, multi-million-dollar mortgage. Oh, that hurts. So even folks who can afford it but don't want to, they've just kind of been waiting for things to come down. And so we're right at the onset of having things come down. And you're going to see more and more of this in the media. Another aspect of Shepherdson's argument is the supply side of the equation. He believes the home supply will increase going forward. Prices tend to fall when supply increases. I think whatever supply you have coming onto the market right now gets gobbled up by demand that is kind of unknown, because we don't really know what that looks like as far as people pulling the trigger in a period post when you've doubled interest rates this quickly. We don't know what that looks like. I think the demand is greater than we're being given credit for. And so whatever inventory comes on gets sucked up. And I think that's what we're in the midst of right now. That's where, at least the West Coast market, Seattle, even Portland, things taking off. I know you want to say, well, if you want to get shot, well, that's different. But you know what? Throughout all of this craziness and all the craziness in Portland, their numbers still look strong. Their housing numbers still look strong. It's not like people are walking away from their houses. They might move, but somebody else comes in right behind them to buy that house, and prices aren't dropping, right? You just got a situation where people are like, I don't believe with the ideology of what's going on here. So the increase in existing home supply, meanwhile, appears to have stalled in December, with inventory of single-family homes unchanged at 3.4 months of current sales. Still a seller's market. You get any more of that absorption rate happening at greater numbers, you could be off to the races again. I'm not saying that's going to happen, but that could happen. And that could be your early summer, newscast. All right, hyperinflationary real estate market, need to cut it back again. But we remain confident that inventory will rise again before long, especially as the downward adjustment in prices accelerates, he said. I don't think you're going to see a downward adjustment in prices. I think the downward adjustment you've seen in prices to date is kind of what you get. I think you're already seeing the market kind of level out. And then depending on how many buyers come out of the woodwork, depending on how, interest rates correct themselves or drop, however you want to see it, whatever happens, I think a lot of that's going to lead to, all right, 15% drop. Hell no. No, that's just not happening. 5% total, maybe. But again, remember how much things went up. Some markets, they went up 40% in, 18 months. Insane numbers. So that's kind of what we're dealing with. So the real estate market is still, in my opinion, it's still got its velocity going. It's just been kind of at a, somebody's disengaged that clutch here for a second. Let's just hold the clutch down on this little market. And so, disengaged, the market going at all. Now it's slowly being engaged, and here we go. Because you've still got the same things in place. You've got demand and not enough supply. Now you're having those interest rates drop. It's going to fuel that demand. Who knows? We could be in for a 10% increase this year in prices. How about that versus a 15% drop in home prices? Beauty of having this, spoken on a podcast is that, we get to see if I was right or wrong. Check back in with me. Let me know what you think. Type in the comments what you think is going to happen. Don't just say I'm wrong. You tell me what you think is going to happen and let me know why. Thanks for being here. We'll catch up soon. Talk to you on the next one. Bye for now.